Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, August 14th, 2018, and this is the Daily Report for gold and silver. We have gold and silver showing modest gains on the day, very much tempered by continued dollar strength. We'll look at that when we pull up our technical studies, but gold futures basis most active December, trading at 1201.10, putting it up about $2.20 on the day. The high is important because we are short. We have a stop just above 1208, high today 1205.80. Silver fared a little bit better than gold did, gaining almost 7 cents on the day, trading at 1505. And when we look at the other precious metals, platinum gained $2.70, and palladium gained about a full percentage, or $9.40 at $8.90.30. As we said, all of this found within some real strong headwinds from continuing growth in the U.S. dollar index, 96.56, gaining about 0.3%. Now, in terms of the equities markets, they did do well today. 112-point gain in the Dow Jones, 25,299. S&P also gaining 18 points at 2839. And lastly, the composite index gaining 50 points at 7870. So traders, the first chart that I do want to look at today is a daily candlestick chart of gold futures. This is the continuous contract now based upon December. When we look at this chart, the first thing that kind of jumps out at us is how we had a substantial break below a former level of support, which resided at roughly $1,218. We can say that it resided there for quite some time through the series of bottoms that came in right in here. And we would always get some sort of a distinct recovery moving back above that price point. That, of course, all ended yesterday when we had a hard break to the downside and the market, in fact, closed near those lows. We can really see that as we enlarge or blow this chart up, and we can see the kind of chart damage that was created as this market barreled through a critical price point right in here and closed well below that price point, closing just at $1,200 per ounce. Now, the market is at 1201.10. This is futures. Spot market's still well below $1,200. And in terms of today's activity, there were very nominal gains. As I said, about $2 when we look at the futures market, and only about 60 cents when we look at spot. Spot is currently trading at 1193.70, and that puts it up about 60 cents on the day. And when we look at the Kitco Gold Index, we can see that we had extreme dollar strength that took away almost $5 in value, $4.90. Normal trading did bid up the precious metal by about $5.50, but the net change was only a gain of 60 cents, and that was really due to dollar strength. And traders, we can clearly see the substantial technical chart damage created by yesterday's downside move in gold, especially when we look at a weekly chart. We have that up right now. Although it's only Tuesday and this candle is accounting for only 2 trading days itself, you can see it's a clear and strong break below the 0.618% retracement. And because of that, my sense is that we need to revise our target. As you know, I had originally been looking for $1,200 gold. We achieved that yesterday. This could in fact be the bottom, but as of now, we have absolutely no technical confirmation to indicate that as the fact, and we would need to see some sort of recovery in terms of a key reversal. We would see it in a candlestick pattern such as this key reversal here. This is a piercing line on a weekly chart, followed by the confirming candle or piercing line confirmation here. We had a small little rally here, and we can see that that was a 3-river morning star, red candle, star, then green candle. Of course, it did go up just a little bit, but in all occasions where the market has been in a defined downtrend And then from that defined downtrend, we saw some sort of a reversal. We had a clear and decisive candlestick pattern that indicated that. Here, we have a variation off of a three-river morning star. Here's a piercing line. We're going to get some sort of an indication. Now, this, of course, is going to lag behind proper movement because we're looking at such long-term studies, weekly candlestick charts. For right now, though, I do believe all things being equal, meaning as long as the fundamentals at play remain at play, I clearly see a break below 1200. And if, in fact, we do get that, we are going to recommend adding to our current short position, and our target will then become a revised target or a new target of 1178. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.